Felix and Georgia Daniels' baby is due any day now. They bought their home in 2021 and have been keen to get the nursery ready.
Nappies?
We weren't sure if the prices were going to keep going up, but we did know that we wanted to have a place before we started to have a family.
Their $600,000 mortgage is manageable for now, but they're worried about what will happen when their fixed rate of 1.89% ends in October. Their repayments will rise by about $1,000 a month.
Pretty nervous. It's going to be really tight.
At least $275 billion worth of fixed rate loans with the Big Four banks come to an end between July and next December.
So almost half of loans taken out in the middle of 2021 were taken out on a fixed rate basis, which is unusually high for Australia.
While homeowners with variable mortgages have been facing regular increases as the cash rate goes up, fixed-rate borrowers are now facing a steep jump in their repayments, basically overnight.
Well, someone who fixed with the Big Four bank under 2% back in July 2021, they could be looking at a revert rate of an average of 7.18% if the cash rate rises by another full percentage point from this point on, which is expected by a number of economists.
A homeowner who fixed for 2 years in July 2021 on a rate of 1.94% has been paying just over $4,200 a month on a $1 million mortgage. When that deal comes to an end, their repayments will jump to nearly $7,000 if the cash rate reaches 3.85%.
There will be a small group of people, particularly those who bought at the peak of house prices during the pandemic, who may have more problems, and they're the ones that the banks really need to monitor.
Personal finance lecturer Di Johnson says around a quarter of all new homeowners have borrowed 6 times their income or more to buy their properties.
I think there's a real hidden financial pain when you look at mortgages, because in Australia people will go without almost anything to be able to pay their rent or their mortgage.
It's definitely 57 for Westpac in the middle of the year.
But there are things fixed-rate borrowers can do now to prepare for the jump in rates.
Start thinking about your next steps at least 2 months in advance. Shop around for a decent rate, but also understand what your bank might be willing to offer you. Renegotiating is one tactic, another is to refinance.
A number of other things that people can do is also starting to make extra payments, building up a buffer, trying to save more.
If you still can't afford your repayments, speak to your lender's financial hardship team. They can defer repayments, waive fees, or help consolidate your debt. Or you could speak to a free and independent financial counsellor.
Yeah.
Georgia and Felix hope to negotiate a deal with their bank. The couple plan to tighten their belts.
Nice.
We haven't managed to save anything now for a while. It's just living, paycheck to paycheck.
The increased mortgage repayments might mean Georgia will have to work more hours than she'd hoped.
Maybe I'll have to go back full time, even though in an ideal world I would go back part time.
It's added stress at an already overwhelming time of life.